This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Spot premiums for Middle East crude rose to their highest in more than 2 years as strong demand from top importers China and India to replace sanction-hit supplies from Russia and Iran drove up prices, traders said on Thursday. The Biden administration on Friday announced sweeping sanctions targeting Russian producers and tankers, disrupting supply from the world's number 2 producer and tightening ship availability. That sparked a scramble among buyers in China and India, the world's top and third largest importers, for alternative oil supplies and tankers.
Oil prices fell back slightly on Thursday, a day after settling at multi-month highs on the latest U.S. sanctions on Russia and a larger-than-forecast fall in U.S. crude stocks. Brent crude futures were down 37 cents, or 0.5%, to $81.66 per barrel by 10:42 GMT, after rising 2.6% in the previous session to their highest since July 26 last year. U.S. West Texas Intermediate crude futures slid 35 cents, or 0.4%, to $79.69 a barrel, after gaining 3.3% on Wednesday to their highest since July 19. U.S. crude oil stocks fell last week to their lowest since April 2022 as exports rose and imports fell, the Energy Information Administration said on Wednesday.
Moving on to the top news in the energy sector.
U.S. crude oil stocks excluding the Strategic Petroleum Reserve, SPR, fell last week to their lowest since April 2022 as exports rose and imports fell, the Energy Information Administration, EIA, said on Wednesday. Crude inventories fell by 2 million barrels to 412.7 million barrels in the week ending January 10, the EIA said, compared with analysts' expectations in a Reuters poll for a 992,000 barrel draw. Net U.S. crude imports fell by 1.3 million barrels per day, EIA said, to 2.05 million barrels of oil per day. And weekly crude exports were up 1 million barrel of oil per day to 4.08 million barrels of oil per day.
OPEC forecast on Wednesday world oil demand in 2026 will rise at a similar rate to this year, while reducing its figure for 2024 for a sixth time, following economic weakness in China, the world's biggest importer of oil. The 2026 forecast is in line with the Organization of the Petroleum Exporting Countries' view oil use will rise for the next 2 decades, in contrast to the West's International Energy Agency that predicts it will peak this decade as the world shifts to cleaner energy. OPEC, in a monthly report, said demand will rise by 1.43 million barrels per day in 2026, a similar rate to the growth of 1.45 million barrels of oil per day expected this year. The 2026 prediction is OPEC's first in its monthly report. Next, we have the top news in metal market. Prices of iron ore futures climbed to a 4-week high on Thursday, supported by reduced shipments from a major producer and growing expectations of further rate cuts by the Federal Reserve following cooler-than-expected U.S. inflation data. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trade 1.92% higher at 797 yuan, $108.71, a metric ton, its highest since December 18, 2024. The benchmark February iron ore on the Singapore Exchange climbed 1.87% to $102.45 a ton by 0722 GMT, the highest since December 19.
Copper prices touched a 5-week high on Thursday after the dollar's rally paused and investors had renewed hope that China would take more action to boost its sluggish economy. 3-month copper on the London Metal Exchange rose 0.9% to $9,250 a metric ton by 10:20 GMT after hitting $9,271, the strongest since December 11. China's state media reported that the country's central bank may cut bank's reserve requirement ratio before the Spring Festival at the end of this month, helping to boost the Chinese stock market.
We will now look at the top news in the agricultural sector.
Grain crops in the EU are mostly in good condition, helped by moderate weather so far this winter, and the bloc remains on course to recover from last year's rain-hit harvest despite still soggy fields in France, analysts and producers said. A dry end to autumn let farmers in Western Europe wrap up planting of winter crops and avoid a repeat of the previous rain-disrupted campaign, which led to France's smallest wheat harvest since the 1980s. Strategy Grains analysts said in a monthly report on Thursday that conditions for winter wheat and barley in the European Union were satisfactory.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.